pricing on junk versus other forms of silver have temporarily collapsed. I think dealers are bidding $4 and $5 under spot if you go to sell it, and you can buy it at spot, maybe 25, 50 cents over spot. It's the cheapest form of silver available right now. For those of you who bought 100-ounce bars 3 years ago, 5 years ago, 15, 20 years ago, because it was the cheapest form. It was the cheapest form because it's the poorest form. Your 100-ounce bars are not going to work for you when the system goes down. As soon as the great taking starts to take over and people are realizing that they've lost everything, you're going to have absolute anarchy. And by definition, I mean, it's going to be a Mad Max world. Well, you get your assets into a position where they can't be taken. If you own stocks, get the certificates. I mean, owning bonds is a fool's game because no matter what happens, the debt's going to go to zero anyway. I mean, you're not going to get paid back.
You're watching CapitalCosm. My name is Danny. It is November 19th, 2025, and my guest today is Bill Holter, now also known as Mr. Gold himself. Bill, thank you so much for coming on the show, my friend.
Thanks for having me back, Danny.
Yeah, let's just dive right into the nitty-gritty here, Bill. I'm going to pull up a chart of gold here. I want to get your thoughts on what we're seeing here in terms of the price action. Let's go ahead and get your overall view in the metals market. Gold currently sitting at 40.61 spot. And as you can see, I mean, we've had a precipitous run up. You and I have been looking at this chart for years now. Here's a monthly candlestick. Let's look at the daily candlesticks. And yeah, just kind of recap what we've seen the last 4 or 5 weeks or so. We topped out at around 4,400 or so, and we've been kind of consolidating sideways since then. What's your prognosis on gold?
Well, it's like gold was overbought. Silver was more overbought than it was in 1980, back at the peak. And what you've seen with both of them are high-level consolidations. The paper trade is waning and the physical market is growing. The physical markets are growing. Just look at what the BRICS are doing. I mean, they're opening storage facilities, refineries. They're very serious about accumulating both gold and silver. And it makes sense because, you know, for years and years, they had, I guess the metaphor is tons. They had tons of dollars on their books. And now they're adding tons of real money on their balance sheet.
And you also see this here in the United States. They've outlined silver as part of critical minerals, as part of the critical minerals list, let's say. And I mean, you made the point earlier on before we hit record, every one of these Tomahawk missiles, they fire off into Russia or wherever. I mean, that's a monster box of silver just gone completely off the game board.
Right. Yeah, I forget what the number is. It's something like 473 ounces or something like that. But yeah, that's silver that's obliterated. You know, can never be reclaimed. And this in a market that is now in its 5th year of a structural deficit, supply and demand deficit.
And silver is a very unique market because, number one, it's very small. So if there were manipulators out there, they'd want to manipulate the silver market as opposed to the gold market. It's much easier to move the silver price up and down. But I mean, what are some of the dangers? I mean, what are some of the dangers present in the silver market right now? I mean, are they losing control of their price manipulation schemes? I mean, and what are the signs that they are or are not losing control?
Right. Well, obviously, price tells you that they're losing control, but let's not even talk about price. We did mention that we're in a structural deficit. We've had a supply and demand deficit for 5 years, and that's what happens when you get a small a small market size-wise as far as dollar amounts. I mean, the total production globally is only like $30 billion a year. But when you get a small market that's easy to manipulate, and if you're constantly manipulating to the downside and suppressing the price, what that does is it makes it much more difficult for producers to earn a profit, so they mine less silver. So, a direct consequence is the fact that we're in a structural supply deficit. Other things to look at, you can look at the lease rate on silver. You can look at the lease rate and the amount of shorts available on SLV, which is strictly paper. That's not actual physical silver. But the rates to borrow, it's blowing the shorts. The shorts are being blown up.
Yeah. And so when that happens, I mean, we've seen episodes like this occur in nickel, but they just end up shutting down the nickel market.
Right.
Do you anticipate them, if this gets really bad? I mean, because there was a point, 5 or 6 weeks ago when it was just like, I mean, we could look at the numbers here. I mean, you look at this rally from August all the way out until October. It's like what? A few red candlesticks. I mean, it was getting pretty wild. I mean, even like I was in disbelief. Like, how much longer until this thing is like? Have they lost control of this thing? But now it seems like they've, London's managed to get their hands on some leased silver, and they've managed to mitigate some of the pressures. But I mean, once this thing really pops off, I mean, where is this gonna go?
No one can tell you that. And if they do, they're making up a number. I've said for years that on gold and silver, the numbers that we're going to go to are higher than anyone has projected of any number for gold or any number for silver. The actual number, I'm convinced, is going to be far higher than the most optimistic projection there is. And the reason being, gold and silver what they've done is they've sold paper contracts against gold and against silver that don't exist. And we're going to move into a failure to deliver scenario. And when that happens, man is a funny animal. When you tell man he can't have something, he wants it that much more.
Yeah.
And I mean, you're talking literally trillions of dollars that are going to be dislodged from the stock market, from the bond market, even from the crypto markets. And all that money is going to be pointed toward gold and silver. Those markets, I mean, especially silver being so small, they cannot handle the type of capital that's going to be heading toward a safe haven or these safe havens. And one other aspect of man, fear is the greatest emotion there is. And people are going to be moving money into gold and silver, not out of greed, because I could buy gold at 50 and I can sell it at 100 or 200 or whatever. That's not going to be the motivator. The motivator is going to be fear of losing everything in other markets and putting that money into something that is a safe haven and cannot bankrupt. That's the whole key. They can't bankrupt in a world that is defaulting.
Well, you remember the big lines that we saw a month ago in China and in Australia and in other parts of the world, where people were just waiting like blocks and blocks, in line from the entranceway of these different bullion sites. And there was no shortage of silver or gold or anything of that matter. It was just a huge price spike. One could argue that, was mainly driven by
shortage.
Go ahead.
There was a shortage.
That's true. There was in China.
There was in China, but also there were limits on the amount that customers could cash and carry out. So they did try to ration what supply they had.
Yeah, and that's like that's just a fraction of the kind of scenario that we're kind of thinking up in our heads, because there's no real. There was no danger of the fiat currencies are devaluing. You look at the money supplies of the U.S. dollar, the RMB, the euro, the Japanese yen, all of them. They're all going up at the same time. But there's no real imminent threat that your currency is going to be devalued to the point where you have to go out and spend whatever you have and procure the metals ASAP. But I mean, that was a very small sample of what was to come, and it was pretty big. I mean, those lines were pretty big. I mean, especially in Asia.
Right. Well, the biggest lines you don't see, and I don't see, nobody sees them. The biggest lines are the electronic lines.
Mm-hmm.
I mean, once you get full-fledged movement from, family offices, hedge funds, they're smelling blood in the water. Once we get to that point, it's going to make what we've already seen look like not even just barely a starter.
Yeah, and we're already starting to see crypto sell off. Bitcoin is down to 90,000 or 90,000 some odd dollars, but gold and silver have both held on fairly steadily. It appears that crypto is highly correlated to the Nasdaq, which is atypical of a safe haven asset like gold, and to a somewhat of an extent to silver as well. Silver does have some industrial usage too, but when I look at silver and I hear these arguments that silver is more industrial than monetary, but doesn't the fact that silver have utility kind of make it more valuable than gold, or the fact that silver has more utility than gold, shouldn't that make it more valuable? I mean, holding the supply side constant.
Yeah, well, silver's got many, many uses. It's not just industrial. I mean, you've got technological, you have medicinal. I mean, go back hundreds of years. You remember the term, he was born with a silver spoon in his mouth. Well, only the wealthy people could afford silverware. And the reason they used silverware was because the antibacterial
properties.
The antibacterial that properties of silver, right? Exactly. Gold is basically strictly money, and silver for several thousand years was also money, but it has other uses. It has more uses than any other element on the planet.
Yeah. Well, I also know that the fiat currencies are in trouble. We've looked at money supply on this channel before. Money supply, not just in the U.S., but across all the other currencies is going up. But you also have something else that's going up, and that is something you just brought to my attention before we hit record, and that is the Japanese 30-year yield. I mean, check this bad boy out. Currently at 3.337%. Well, this is an all-time high in the Japanese 30-year yield. So why is this something to keep an eye on, Bill?
You want to keep an eye on the Japanese interest rates and also the Japanese yen, because that is it's the bed, if you will, for the carry trade. The carry trade that had been put on. They were doing this back in the 90s, early 2000s. You could borrow in yen at low interest rates, and you could just turn around and buy U.S. Treasuries and make the spread, and that's fine as long as interest rates don't rise in Japan, and it's fine as long as the yen itself does not rise in value versus the dollar. It was a cheap way of funding, and it's being shut off. Not only is it being shut off, but it's turning some of these carry trades upside down because the rate to carry is higher and the cost to buy the Japanese yen back is higher. So the carry trades are blowing up. That's what that chart is showing you.
Right. But you also have the 30-year yield here on the U.S. side. I mean, that's also somewhat, that's still trading at a premium to the 30-year Japanese bond. Currently, you've got the 30-year at 4.73. Is the number to look out for? Is that when the when the Japanese 30-year begins to overtake the American 30-year?
Oh, yeah, well, that would certainly be a cause for alarm. But just this elevated level, if you're looking at the chart, it's straight up.
Yeah.
When is that going to stop, or does it stop?
So what is this implying about Japan's current status?
Uh, in my opinion, I mean, look at the debt to GDP level in Japan. I mean, they're at what, 300% or thereabouts.
Oof.
And you go back into the 1970s and early 80s. But I remember when I was in college in the early 80s, any country that got to 100% debt to GDP, they were opening the door to Banana Republic land. And now there's hardly any countries around the world that are under 100% debt to GDP. I mean, the U.S., the issuer of the world's reserve currency, is at 130%. Back in 1980, the United States would have been considered a banana republic. And actually, I mean, as an aside, if you look at the rule of law and the things that are happening in the United States, there's an argument we are a banana republic, financially and judicially.
Well, it does appear like the controllers or the elites or whatever you want to call them, they're just plundering everything before this entire ship comes down. They got to get while the getting's good.
Right, and that goes along with what we've talked about before, the great taking. They know it's coming.
I mean, isn't this 50-year
and the
mortgage?
one thing about that's a joke, the 50-year mortgage. I mean, that is absolutely hilarious. I posted, when the day that came out, I posted to my website, a couple articles on that, and that is so bad. That is so. Yes, it lowers the monthly payments, but it's putting people on the gerbil treadmill. It's just that is stupid, in my opinion. I did want to mention the other thing with gold and silver. You've got the two markets. You've got the paper market, and you've got the physical market. And for years and years and years, the paper market acted like the tail on a dog that wagged the dog. In other words, paper markets made pricing. They priced the market. The problem now, because with COMEX and with LBMA, you have buyers that are lining up to take physical off the exchanges. The problem is they can't print gold and they can't print silver. The only thing they can do is print contracts that, when all is said and done, they cannot perform, which makes them worth zero.
All right, quick break here, because if you're buying gold or silver the normal way, you're probably overpaying by a lot. And that's because most retail dealers quietly tack on these huge markups, sometimes 10%, sometimes 20%, sometimes even 30%. And you don't even notice it. It's like paying $115 for a $100 bill. Doesn't make sense, right? So that's why I've been using the Bullion Standard Pro. It's a membership that basically lets you buy precious metals at real wholesale prices. The same prices that dealers get. So no inflated premiums, no middleman games. Their platform updates every 5 seconds, straight from mints and distributors. So what you see is literally the real market. And here's the crazy part. If you buy something like this gold American Eagle, here's the amount of money you're going to be saving at the time of this recording, at least. So it basically pays for itself multiple folds on many occasions, depending on what you buy. And if you want to try it out, they're hooking up my viewers with an exclusive 10% off their first month. Just use promo code COSM10 at checkout. That's COSM10 at checkout. So if you're stacking, investing, or just tired of getting hit with hidden markups, check them out now. Bullion Standard Pro. Click on the link down below in the description box and use promo code COSM10. Now let's get back to the video.
So all I'm getting at is the physical markets are taking over here.
Yeah. And we saw that happen a few weeks ago when we had this point of backwardation in silver. And now the gold spot market is getting awfully close to the futures price in gold as well.
Right. Yeah. Silver's still got slight backwardation. But I mean, all the lease levels, all the borrow rates, everything's elevated. It just reeks of a massive short squeeze.
And now, and you also have, is it? I want to get your thoughts on this. You have Robinhood enabling short selling on their platform now. So you're effectively opening the floodgates for unlimited losses for the average retail investor who isn't, to be honest here, isn't really that knowledgeable and that savvy when it comes to investing to begin with. I mean, is this a sign of a bottom here or a top? Because I would think that, given the fact that the markets have been rather sluggish lately, and now they're introducing short selling, I mean, wouldn't this be a sign of a bottom here when it comes to the markets? What do you say?
I say it's the sign of end of empire.
Well, that's what we've been seeing lately is with Robinhood, and
it is what it is.
It's opened up
this
gambling
is
to everyone else.
Of an empire.
Mm-hmm.
Say again?
No. I mean, it's opened up the stock market akin to like some sort of gambling platform, like a casino. Let's say you've got like these predicted markets, these betting markets. I mean, it's all like it's like you said,
Correct.
It's end of empire.
But understand this: you're using the casino analogy. Understand this: the casino itself is bankrupting. So what you need to do is you need to cash your chips in now, get those chips out of the casino and out of chips. You got to convert your chips into something real, and that's basically you need to convert your fiat currencies to gold and silver, because the analogy of the casino being bankrupt, you've got sovereign treasuries all over the world that are upside down.
Now, there's many different roads to take when it comes to converting and allocating your capital into gold and silver. I know you're big into junk silver as a means, as kind of like a means to do so. Why is that? And I know you have some stuff that you want to talk about junk silver on. Why is junk silver?
Yeah, and this is
the way to go, in your opinion?
This is for non IRAs. In an IRA, you've got to do a product that's 99.9 pure. Mm-hmm. Junk silver, I've been an advocate of junk silver for the last 10 plus years now. It's the smallest denomination of silver. In other words, 14 dimes equals 1 ounce. I think it's $1.38 equals 1 ounce. Mm-hmm. So that gives you 14 transactions in a system down scenario. If you're going to barter, now you've got the smallest unit of silver. It's recognizable because everybody knows what a dime or quarter looks like. And as long as it says 1964 or earlier, you know it's 90% silver. It can't be counterfeited, because if somebody comes to you with a bright, shiny, brand new dime or quarter, it's probably fake, because junk circulated for years and years and years. It was in people's pockets. It should be scratched. It should be dirty. And on top of that, it is U.S. mint lineage coin. Now, the reason I wanted to talk today about junk is because the pricing on junk versus other forms of silver have temporarily collapsed. I think dealers are bidding $4 and $5 under spot if you go to sell it, and you can buy it at spot, maybe 25, 50 cents over spot. It's the cheapest form of silver available right now. The reason being, back in the late 70s and the early 80s, I'm not going to say it was the only means, but the primary means of Americans that wanted to buy silver, the junk silver, that was really all there was available for investors. So you had, I don't know, well, you've had years since then too, but you had 5 or 10 years there where people were accumulating silver. They saw the $50 peak. You had some buyers, of course, at that level or in the 40s, and they hung on for 20, 30 years plus. What's happened is a lot of that legacy silver, when the price got to $50, people started selling. People and large hoards have been sold. What's happened is the dealers don't want to hold all of that as inventory. So if they're bidding 5%, 7%, 9% under spot, they take that junk in, they send it to a refiner, they refine the silver out of it, and then they sell it that silver on the spot market, and that's how they make their profit. The problem long term, now this is a short term problem because refiners are backed up. Some refiners are even refusing to take more junk in. They're backed up. But once this backlog gets done, the discount will abate. It'll come back to spot or above spot. And going forward, there's way less junk silver left in existence because it got melted down. So if you're buying silver today and it's not an IRA account, it's foolish to not buy junk silver. It's the best form for an American to own, and it's the cheapest.
And so how do you tell if something is real silver versus not? I know there's different tests one can do, but is there like, how do you go about it?
Well, that's why I say junk is the easiest to tell. Because first off, you could drop a coin on a counter and it's going to sound way, way different than a current coin. You just hear a little thud as opposed to a ping with the silver coins. But as long as the coin says 1964 or earlier, all dimes, all quarters, all half dollars, all silver dollars I take that back on silver dollars, but dimes, quarters, and half dollars, they were 90% 90% silver, 10% copper.
Do you think they'll come for silver like they did? Go ahead.
That's your way to tell whether it's real or not.
Right.
Is the date on the coin.
Easy peasy. But there's also, you can also buy silver forks and spoons and silverware.
Correct.
Plates.
Yeah,
and, things of that nature too. You can things you can just find at a yard sale.
Yeah, but how are you going to barter that? I mean, when the system goes down, if somebody comes to me with 1 ounce generic rounds or 10 ounce bars or 100 ounce bars, I mean, I don't really have the ability out in the field to test them. I mean, I rely basically when it gets sent into the wholesaler, they do the testing. So if it's not real, it'll be alerted right away. The most readily recognized form of silver that has proof positive that it's got 90% silver in it is junk silver. So for those of you who bought 100 ounce bars 3 years ago, 5 years ago, 15, 20 years ago, because it was the cheapest form. It was the cheapest form because it's the poorest form. Your 100 ounce bars are not going to work for you when the system goes down.
What about during a great taking type of event where, you're not really dealing with a Mad Max scenario, but you're more so dealing with like a dystopian tyranny, let's say, of overreach of government? Will they come after our silver like they came after our gold back in the early 1900s?
Well, they didn't ever come after our gold. I mean, I think there was a dozen people got fined or had jail time. There was no door-to-door knocking. There will never be door-to-door knocking. Can you imagine how many deaths there would be the first day if you had federal agents going house to house? Give me your gold, give me your silver. I mean, there wouldn't be out in rural areas, there would not even be a discussion. There'd be a gunshot, the door would close, and that would be that. I do want to mention, you said about the great taking takes place.
Mm-hmm.
And that's not a Mad Max scenario. I disagree with that entirely.
Mm.
As soon as the great taking starts to take over and people are realizing that they've lost everything, you're going to have absolute anarchy. And by definition, I mean, it's going to be a Mad Max world.
So you think all roads lead to Mad Max as opposed to like a
I
dystopian
do.
technocracy?
Well, yes, it's going to be dystopian. There's no question about it. But
Mhm.
there is going to be a period of time, and I've said many times, I don't know whether it's going to be for 2 weeks, 2 months, 6 months. If we go more than 6 months, I mean that you're talking about a world that uh, would make Mad Max the movie look like it's tame.
Oh, 90% of the population would just die off in 6 months. I mean, I'm not. It's not just me just kind of saying this stuff out of nowhere, but there's been actual, studies and analyses on these. Like 6 months would kill 90% of the people out there.
Nobody knows how to hunt anymore. Nobody knows how to fish. Nobody knows how to provide for themselves.
And so, what are some of the big takeaways one can have to arm themselves and prepare for, number one, a great taking, and then number two, the subsequent Mad Max that would come after it?
Well, you get your assets into a position where they can't be taken. If you own stocks, get the certificates. Uh, I mean, owning bonds is a fool's game because no matter what happens, the debt's going to go to zero anyway. I mean, you're not going to get paid back. Um, but if you've got big, large bank balances, buy gold. That's out of the system. It can't be taken from you unless they come and take it from you. Uh, so your preparations is to get out of the system. That's one preparation. The other preparations are for your life. Do you have you have ability to have clean water? Do you have the ability to uh, create electricity if the grid's down? Do you have food supplies? Do you have a way to protect your position? That's all survival stuff. And I've recently, I think probably the last at least half of my last dozen interviews, I've mentioned on my website. There's an icon up top. It's called Grizzly's Corner, and those are articles and links provided in the articles written by a guy when he was younger in his 20s and 30s. He used to take a pack of mules into central Idaho, which is probably the most unfriendly place in the continental US, and he'd go for 6 months and he'd survive and he'd come out and he'd be stronger for it. But this guy knows how to live off the land, and he's written articles. I'm not trying to blow my website's horn,
Mm-hmm.
but it's the best prepping resource that I've come across. I mean, this guy's just fabulous in some of the things he suggested.
But don't you?
And he
I mean, you
does
also
provide
need.
links to he does provide links to a lot of the products that he's used.
Hmm. But don't you also need numbers? Because I mean, you and I could be the most well-equipped
Absolutely.
people in the world, but if like a horde of like
Right.
50
But you got
guys
to
come in,
right. Right. Well, first off, you need to be away from population. You need to make it difficult for 50 guys to show up in your front, on your property. Um, so if you're more remote, you have better chances. And yeah, absolutely. You need probably a dozen people at least, because you've got to sleep. There's work that's got to be done. I mean, you can't do it all on your own. It's not doable.
no, not at all. Well, I mean, Bill,
Somebody's got to have your back, and you got to have someone else's back. That's what it amounts to.
right? What before like the failure to deliver occurs or whatever the catalyst is to bring down the entire system and kind of start this daisy chain into a technocracy and then eventually into a Mad Max scenario. What are some of the signals that we should be wary of but it's kind of be on the watch for before it occurs?
I think you're watching it. It's happening before your eyes now. I mean, look at the volatility of everything.
Yeah. So, well, all right, my friend. Anything else you want to talk about before we take this thing home?
Just my advice is just do the best you can, and you're the only one who knows whether it's the best you can do or whether you're being lazy.
Yep. Well, all right, Bill. Thank you so much for coming on, my friend. Always good hearing from you, even though it's not always the best of news, but it is the news. So that's all that matters. So, Bill,
Right.
where can people find you if they want to get in touch and see more of your work?
Go to my website. It's just billholter.com. And like I said, make sure you do click on Grizzly's Corner. There's great information there. If you want to contact me regarding precious metals business, my business email is bholter@proton.me.
All right. We'll have the links to your website down below, so be sure to check it out, guys. And if you enjoyed this podcast and got value out of it, I don't know how you couldn't, but if you did, hit that like and subscribe and comment go in the comment section. If you agreed or disagreed either way, let me know your thoughts. I do in fact read all the comments. So by liking and subscribing and commenting and doing all the YouTube stuff, you do in fact help us in pushing this video and this channel in the algorithm. So if you'd like to support us in a nice and easy free way to push the channel, a little bit does go a long way. And then finally, check us out on Substack at capitalcosm.substack.com. And so with all that said, I will catch you guys later. Thanks for watching. Bye.